So my family's been in real estate for 5 generations. I started the Oppenheim Group real estate brokerage, done about $4 to $5 billion in transaction volume.
So I feel like my experience helps me to see what comes next.
People are arguing now that we're in a real estate bubble.
We've had arguably the worst 3 years ever in real estate. Interest rates keep climbing.
Volume is at a historic low. When I say historic low, I mean 50, 60 years.
Do you think buying a home is worth it at today's prices?
All these areas that blew up, Miami, Austin, Las Vegas, Nashville, I wouldn't get near those places.
Do you think California is doomed?
When any one party gets too much control, they veer off track. California's veered off track because it's been dominated too long by people that don't have any pushback, and there's really no debate. We spent $24 billion over the last 8 years, and the problem's gotten about 40 to 50% worse.
So what's your investing philosophy for 2025 and 2026? What are you doing with your money?
People overanalyze. It's pretty common sense right now.
In terms of the real estate market, people are arguing now that we're in a real estate bubble. What are your thoughts on this?
I vociferously disagree. Who the hell says that?
Everyone on Twitter.
That's so dumb. There's a lot of dumb on Twitter.
So you're saying that sales and everything, they're still continuing to trend up?
You mean a real estate bubble like it's high, it's going to crash?
Yes.
I mean, that's the opposite. We've been coming down. Prices have been coming down, and volume's been coming down since late 2021, early 2022. We've had some of the 3 years in real estate. I've had some tough years. I mean, it's all relative, but no. The last 3 years have been really tough because interest rates have been high. Volume is at a historic low. When I say historic low, I mean 50, 60 years since volume's been this low. So very, very historic in terms of the decrease in volume. Prices have come down. I mean, I don't want to speak, I'm not an expert nationally, but nationally prices are not in a bubble. Big cities post-COVID have had a difficult time. LA, New York, some cities in like Miami and Austin and Las Vegas and Scottsdale and, the big kind of, I mean, it's not a political thing, but the big cities in the Democratic states have done terribly. And kind of the more, red cities, so to speak, like Miami, that's in a red state, they have a kind of pretty moderate governance, have done a lot better because they're low taxation, tough on crime. And a lot of people left the big cities during COVID and went to those kind of tertiary areas, like in Texas, Miami.
Do you think that's
and here too?
Do you think that's due to policy, or do you think that's just due to the nature of a big city being already dense housing?
No, it's due to policy.
So what big cities?
So the big cities that had the most draconian COVID policies. I'll use Los Angeles as an example because I live there. They had arguably the most kind of draconian and tough policies in the country. They were the last place in the LAUSD was the last school district in the United States to open back up. We restricted our economy so significantly, and we let out so many people from jails that a lot of people left. That started it. That started the frustration. Then homelessness kind of blew up. COVID caused tremendous homelessness in Los Angeles. And there's no restrictions on that. It's not really enforced. So it was a pretty difficult couple of years in LA. We've turned the corner. We're getting a little bit better, but it definitely is policies. I'm not generally political. I consider myself pretty centrist, but I feel like I call a spade a spade. I've been a Democrat most of my life. I'm really independent now. But the truth is, Democratic policies have been extremely difficult for large cities. The mansion tax is another one. I mean, the mansion tax.
Explain that for people unfamiliar with that.
So Los Angeles put a tax. And by the way, I can totally see how that tax passed. It's a mansion tax on wealthy people, charging 6% on any sale over 10 million or 5% on any sale over 5 million. It sounds good. A few years ago, I would have voted for it, right? Because I didn't, it ostensibly, it's like, oh, taxing the rich, helping the homeless. Great. I mean, who's not going to vote for that? The problem is that it creates so much friction. Now we have sales down about 70% above 5 million. So it's decimated the sales volume, which restricts property taxes. UCLA just came out with a study, basically coming out. And by the way, UCLA public policy is one of the most liberal. They actually argued for the mansion tax. And then they had to come out and say, listen, we were wrong, essentially. The mansion tax has been terrible
Explain
for
the
the
mansion
economy.
tax. What exactly is that?
Sorry. So anytime a property sells, let's say you own a property, you buy it, let's say you buy a property for $5 million and you sell it for $5.5 million, a few years later. You have to pay 5% of that to the city. So that's, $275,000 or something like that.
On the entire amount, regardless of whether or not you make a profit. So you could buy it $5 million, hold it a few years, and sell it for $5 million.
Well,
sell it for $5 million and still have to pay the tax.
What's actually happening is, people bought a house for, let's say, $6.5 million 3-4 years ago. It's worth $6 million today. Perfect example. I had a client buy a house for $7.2 million, sold it for $6.5 million. He lost $700,000, then had to pay the city $300,000 and then commission. So he lost like $1 million too. He'll never buy. He doesn't want to buy in LA again. He wants to move out. So the mansion tax was very difficult. Another study, I don't want to get into too much into studies about the mansion tax, but it's costing the city and the state in terms of taxation from the economic loss, from property tax values not resetting, about $2 to $3 for every dollar that it raises. It also has only raised 20% as much as it promised. It's been an absolute failure.
So why do they not just reverse it then?
Well, it may or may not be on the ballot. There have been a lot of lawsuits. The courts rejected it. It was on the ballot last year. The Supreme Court kicked it off the ballot. It's also really hard to put a ballot initiative on saying, let's repeal a mansion tax. When's the last time a liberal city voted to remove a tax? I don't know if it's ever happened in any city. It's not going to happen in LA. Once a tax is in place, it's really, really, really hard to remove.
What gives you the credentials to be able to talk about all of these stuff if you were to list off your accolades?
Honestly, this one's common sense. Anyone with common sense can see it's true. You can read the studies. The LA Times has run a very liberal publication, has come out, with numerous articles the last few months just saying that it's been an abject failure. The mansion tax is common sense. I don't think anyone could argue that it did what it was supposed to do.
Now, what about for real estate overall, though?
So my family's been in real estate for 5 generations in Los Angeles since the late 1800s. I have a background as an attorney. I went to Berkeley for undergrad and law school, and then was an attorney in Los Angeles for many years. Started the Oppenheim Group real estate brokerage. I have 100 agents now, 3 different offices, San Diego, Newport Beach, and Los Angeles, and Cabo, so 4 different offices. Done about $4 to $5 billion in transaction volume, probably 500 or 600 sales. And I'm, consider myself someone who has critical thinking skills and common sense. So I like to apply that to what I talk about.
And what do you say to people who say you have a bias pro-real estate because of what you do and your income is tied to real estate doing well or high transaction volume?
Yeah, I think that's fair. I obviously want there to be high transaction volume. I'm pro-economic growth. Who isn't? So I want real estate to succeed. I don't know who doesn't. But I'm also not a fluff guy. Anyone who's ever listened to me talk, you guys certainly probably know. I just tell it like it is. I don't have, I just like to be honest and direct. So when real estate's not going well, I wouldn't even buy. Perfect example. I'm not even sure I would buy a luxury property in Los Angeles right now. And that's against my financial interest to say that. But yeah, until Los Angeles cleans up its policies, fixes its homeless problem, fixes its crime problem, fixes its taxation problem, until I start seeing some positive signs, I wouldn't be investing in Los Angeles.
Why is the homeless problem getting so bad specifically for Los Angeles?
So the homeless problem has gotten a little bit better the last couple of years. It probably was at its worst in 2022, 2023. It's gotten a little bit better, not because of it. I don't think because of any policies, because I think our policies are terrible. But just because it got so bad, just like crime and homelessness got so bad after post-COVID, that of course it's going to revert. Regress to the mean, revert to the mean. And it has, but it's still significantly worse than it was in 2018, 2019. We're about 40% more homeless now. We spent $24 billion trying to fix the problem over the last, 8 years. And the problem's gotten about 40 to 50% worse.
So how much value in homes have you sold in the city of Los Angeles?
$3 billion, maybe?
$3 billion.
$5 billion total and maybe $3 billion in LA.
And how long have you lived in LA?
20 years.
Do you think LA is still a good place to live?
LA is still my favorite city in the world. I mean, and I've been to a lot of different cities. I think hands down, LA is the best city, mostly because of the weather. The frustration I have with LA is that it has so much more potential. LA was a better city 5 years ago, significantly better city. Nightlife was exceptional. Restaurants were exceptional. Businesses were coming in. There was a vibrance in the city. The movie industry was doing really well. The homeless problem was under control. Crime was not rampant. There was a sense of optimism in Los Angeles 5 years ago. Now, a lot of that's gone. It's still my favorite city, although I do honestly spend a lot more time in Newport Beach than I used to, and traveling. So I'm not as just optimistic on Los Angeles as I once was, but it still remains my favorite city.
So what would you say are the main 3 things that caused Los Angeles to go from, the great city that it once was 5 years ago to, in your opinion, still the best city, but much worse now?
Yeah, good question. Pretty simple answer. A lack of crime enforcement, and that's through a myriad of different things. Like they got rid of cash bail. They let criminals out. I mean, I had my house broken into. I had my car broken into. Those guys get out like a day later. I mean, there's just now we have a new district attorney that is changing things, but let's see how that goes. We also have our lowest number of cops that I think we've had in decades. Per capita, we have our lowest number of.
Is
cops
that due to
decades.
the defund the police initiative, or is it
Yeah,
due
that
to just like
and just a general difficulty in recruitment because there's been such a negative connotation towards police officers that I think they have a very difficult time. So they have a lot of retirement and they're not replacing them. And we have a huge budget crisis. So we don't have the money to be paying new officers. So yeah, we've been mismanaged. I mean, financially mismanaged. I mean, we have $1 billion deficit, which for a city is massive.
How does the city of Los Angeles have $1 billion deficit when you guys have like the highest taxes across the entire country?
Well, it's because a lot of wealthy people have left. And so LA's answer, unfortunately, to every problem is an additional tax, like the mansion tax. Instead of learning how to solve problems, they just tax more. And the problem is that used to work. For 100 years, that worked. California was able to tax. LA was able to tax and continue to increase taxes because people did not vote with their feet. They couldn't really leave. We were not as mobile as we are now. After COVID, everything changed. Now, so many people are leaving. I've got more clients that have left Los Angeles over just taxes alone in the last 5 years than in my entire, probably 5 times as many in the last 5 years than my entire career before that combined. And it's a big problem. So you don't get tax revenue. Mansion tax is a perfect example. They thought it was going to raise $1 billion a year. It raised about $300 million a year. So it was not even a third of what they expected because they assume that nothing's going to change and people except for the tax getting paid. That's not what happens. What happens is people leave. Developers are not building in Los Angeles. You don't see any multifamily construction, which kind of is counterintuitive to solving the homeless problem. You don't see any investment. You don't see people hiring plumbers and electricians, and you don't see properties trading. So that creates a economic disincentive and less revenue for the city and the state. So until they can figure out how to solve their problems without just trying to additionally tax, and I'm not philosophically against taxing the wealthy at all, but you can't tax someone $1 and lose $1.50 in economic activity. That just doesn't make sense.
What I find interesting is they have this initiative to try to make it really easy to get expedited permits to add an ADU to a property in Los Angeles. And so guess who sees that and they calculate, I'm going to get a great ROI if I go through this new thing that they just created because they're finally doing a right thing to solve the homeless crisis, to solve the affordable housing crisis, is none other than the man sitting to the left of me, Graham.
Fuck. Yeah, you did an ADU?
Yeah.
Not a lot of people have done ADUs.
Oh my gosh. It has been a nightmare.
Working with the city, you mean?
Yes.
Yeah.
It has been an absolute nightmare. So when I looked at this, I thought the cash on cash ROI was incredible. And it is. Going through the city of Los Angeles has been an absolute nightmare.
Yeah.
Getting the city inspector, they don't want to inspect. It goes straight to voicemail for days. And then on Fridays, when a tenant's supposed to move it on the Monday, they say, "Oh, actually, I'm running late. We're going to cancel this." They don't want to work on the Fridays anymore, and so then they reschedule it. And then They swap inspectors. They get a new inspector who says, actually,
and he finds other new problems.
Yeah, we need sewer line CCTV, and you have to schedule it with one of our approved vendors, and the wait on that is 1 to 2 weeks. We already did the work. Here's a CT. No, we need from one of our inspectors.
Trust
we
me.
did this months ago. Oh, you need a new one now.
I did an ADU in one of my houses, and I was getting past final. They sent a new inspector for the same reason, and he measured the tread difference in my spiral staircase, and he measured like 6.5, maybe 7 inches, and it was supposed to be like a max of 6.5. And he told me I have to redo like my $10,000 spiral staircase, and it delayed everything like a month. And then now I've got another client north of Los Angeles. He wants to do get a movie theater permitted, and they're saying that because he's doing work, he's too far away from a fire hydrant, so he has to bring in a fire hydrant. $120,000 to bring in this fire hydrant to do a movie theater. Like, no one's going to do that. Like, there's no discretion, there's no common sense. It's too bureaucratic. When you build a new house now, they are requiring like this drainage system where you collect this water because, I don't know, we need water conservation or something, even though it's just a bucket basically. And it costs like $35,000 to install this. And so, you're trying to build something and an additional $35,000, and then there's several of these requirements. People are like, why? I don't want to build in LA anymore.
Now, before we go into that, you got to ask yourself, what does the future hold for business? Because if you ask 9 different experts, you're going to get 10 different answers. From a bull market to a bear market, things are great, things are doomed forever. Be very helpful at this point to have a crystal ball.
But until that happens, over 42,000 businesses have already future-proofed their business with NetSuite by Oracle, the #1 AI cloud ERP, bringing accounting, financial management, inventory, and HR into one fluid platform. You see, with just one unified business management suite, you have just one source of truth, giving you all of the visibility and control you need to make quick decisions. Plus, with real-time insights and forecasting, you're peering into the future with actionable data. So when you're closing your books in days, not weeks, you're spending way less time looking backwards and a whole lot more time on what's next.
So whether your company is earning millions or even hundreds of millions, NetSuite helps you respond to immediate challenges and seize your biggest opportunities. And speaking of opportunity, right now you could download the CFO's Guide to AI and Machine Learning for free at netsuite.com/iced, with the link also down below in the description. Again, that guide is completely free to you at netsuite.com/iced. Again, netsuite.com/iced, with the link down below in the description. Thank you again to NetSuite for sponsoring this episode, and now let's get back to the podcast.
So does this seem like mostly a policy issue? Is it a culture issue where people just don't... The culture is you can't punish people. You know what I mean? Like if someone does a bad job, you can't say, "Oh, you're fired," because if you fire someone, then it's for some
discrimination.
That's just a problem with government.
Or is it a legal issue because you have so many people lawyering up in the state of California, and lawyers can just basically siphon the funds from anybody and just sue for anything.
There's so many... I'm an attorney. I've been an attorney for 20 years. Actually, I don't know if my license is still active, but who cares? I'll still speak on it. So, example, when I built my Newport Beach office, we had to hire an ADA expert. Someone who comes and kind of guides you in terms of what you need to do to be ADA compliant, American with Disabilities Act, which we're all for helping disabled people, right? But we want to do it in an efficient manner. What he told me is that you'll have attorneys that have no clients. Like no one with a disability will ever go, has gone on the property, but they're allowed to just sue on behalf of the class. So they'll come in, they'll sneak into your office, they'll pretend they're a client, whatever. They'll go in your bathroom, they'll measure the distance between like the toilet and the wall, or in my case, there was they said that my back parking lot was like 2 degrees too sloped. And so they said I had to spend like $40,000 redoing my entire back. And then there was a sidewalk, and then there was an entrance to the parking lot. And so the wheelchair would have to go like 10 feet into, and come back. And they said, no, you have to have a pathway right through. So I had to spend like another $15,000 cutting through like this retaining wall. Then I had to spend about $15,000 on an automated back door. You're not allowed to go out and open the door. You have to have an automated door. So I spent about $70,000 to be ADA compliant, because they said lawyers will come in and they'll measure the slopage and they'll do all this stuff, and and then they'll sue you. I have not had anyone try to access my property in 5 years with a wheelchair. If they did, they would have been able to get on very easily. But I've spent $70,000. Now, I personally think I would have preferred to put $70,000 into an account to help people get wheelchairs, to get prosthetic limbs, like to actually help people with disabilities, as opposed to repaving a parking lot that was fine in the first place. My landlord at Sunset Plaza had to spend $250,000 redoing his parking lot because of a slopage issue. That's not money well spent. That's just bureaucracy taking over. I'm all for, and I think many people are, for helping other people. I'm for taxation. If it's done intelligently. I'm for helping. My mom's entire job was placing people with disabilities in job placement. I'm just for efficiency. There's another example. There's a building that one of my clients lives in on Beverly, and the city required them to put middle income, low income housing, in the building, even though the building is a building for billionaires. So it starts at $5 million, it goes up to $25 million. So the building has had a very difficult time selling units because a lot of people don't want to have low income in their building that they're spending $20 million on, because they're paying an HOA of like $15,000 a month. And yet half the building's occupants, because a lot of these billionaires don't live there. So there may be 30 units for sale and maybe 10 units that are low income. But of those 30 units for sale, maybe only 5 or 6 people live there full time. So it's actually a building more predominantly lived in by low income than by billionaires. And the low income pays 0 HOA, so it's the city that subsidizes it. And yet you've got the wealthy people paying $10,000, $15,000 a month for the pool and for the gym and for valet.
How do low income people get in that building to begin with?
Just you have
Is
to
there a
not
lottery
make,
system, or
you have to not make a certain amount of money for like 10 years. So if you ever make too much money, you get kicked off the list. So
theoretically, someone
the
could be.
incentive is you can be living with billionaires if you continually try to make less money.
Well, and
So
by the
they're
way,
getting
I'm
like
not even
$30,000 to $50,000 a month in value of living in that building.
Well, they're getting way more because they're not paying any HOA. So that's $50,000 to $100,000 just in free HOA amenities, and then they have valet. So, for example, all the building's amenities are accessible to everyone. So the low income obviously will have 24-hour valet and concierge and food brought up and pool, gym.
So how do they get that for free when the person working their ass off,
so the city,
making $100,000 a year?
The city requires the building to create, like, I think in this case it was 10 or 12 units that are low income. So listen, I'm not even theoretically against this. Here's the problem, though. The problem is the building is having a very difficult time selling the luxury units. So the building lost maybe $30 to $40 million in value because they lost so many potential buyers. So I think it would have been better for the building just to put in, let's say, a few $1 million into a fund for low-income housing, and then they go out and you buy a building that's for sale, like an older building, and you get with 150 units in it. And now you've housed 150 people instead of 8 or 10 for $5 million instead of the building losing $30 or $40 million in sales. So it's just so inefficient. That's the problem with it. I don't mind the concept. I actually appreciate the concept. The problem is it's so unbelievably inefficient in how much money is lost and economic activity is lost and sales are lost to help, 10 people when that money could be used.
Speaking of that, I had a clip recently go somewhat viral where I said, and I made the argument, that a lot of buildings in Los Angeles are actually more valuable empty than they are with tenants in them. And I know a lot of people who purposely keep their buildings completely empty because they don't want to deal with tenants. And if they want to sell at some point in the future,
rent control,
they can't.
not tenants.
Because of rent control. But
So
their building is more valuable empty.
The problem with rent controls, and many studies show this, rent control does well in the short term. So rent control manages prices and keeps people in units in the short term. In the long term, it hurts. It hurts the very people that it's trying to help. It actually increases rents because it decreases supply, and it decreases investment into the community. So as an example, nobody wants to buy multifamily in Los Angeles because of all the rent control problems. Nobody wants to build single family in Los Angeles because of the rent control problems because of the mansion tax. So it actually, in the long run, and just about every study bears this out, but it's really hard for people to change their ways. I mean, you think that California is just going to all of a sudden admit, hey, rent control was a bad idea? No, they're just going to keep doubling down like they do on everything. They're not going to admit that the mansion tax was a terrible idea. You won't get one proponent of that to ever admit that. So people are just very stuck in their ways, and they're not willing to think critically. Even though I think all the intentions are great. The intentions behind rent control are great. The intentions behind the mansion tax were great. It's just the inefficient implementation.
Do you think California is doomed? Do you think that it will just continue to get worse and worse and worse and worse?
I think,
or when will they realize how bad it is to actually reverse some of this,
some
bureaucratic layering they've done?
Yeah, some of it's already happening. People are pretty hard-headed. I think the problem with people generally is that they'll put their own self-interested dogma in front of a critically thought out answer. Most people like to be in camps, like Democrats like to always do the same thing. Republicans like to always do the same thing. And they don't question it. Many people are just blindly led down the path, and they just think that everything that one party does is accurate. When the truth is, both parties have really good ideas, and the answer is generally in the middle. When any one party gets too much control, and it'd be the same thing for a Republican-led state that is just has too much dominance for too long. They veer off track. California's veered off track because it's been dominated too long by the same people that don't have any pushback, and there's really no debate. There's just simply no debate. Rent control is not debated in Los Angeles. It's not debated in California. Of course it should be, but it's just not. I think that I don't think there's any doom. I think California will remain the best state in the nation.
But it's continued to go downhill.
It has. I think that there was an awakening. I think what happened was California had a captive audience and Los Angeles had a captive audience before COVID. COVID, when people were able to not work, in the office, and more things are done online, and people are just generally more mobile, I think they lost their audience. And so now California has to attract people because of its policies, when it used to just have to attract people because of its jobs and its weather. And now that jobs can be done anywhere, all we have left is weather, and that's just not enough for a lot of people to stay.
So should you buy or rent in 2025?
I mean, I don't know, that's a difficult question because it's really location specific. I mean, that's a very difficult question. I think it depends on how much personal satisfaction. If you, just from a financial point of view, let's say you have no personal satisfaction in owning versus renting. You just want to make a great financial decision. I'd probably rent. I'd probably rent for a while. I don't think real estate's probably going up, maybe flatline for a little bit. If you can get a good rental, then rent. I don't know why people always think, I don't want to throw my money away, in rent. I mean, if you own, you're throwing your money away on interest at a bank. It's no different. I've never understood the argument why owning is inherently better than renting, unless you care about it, unless you factor appreciation. But if you can rent for, $6,000 a month, and it's going to cost you $9,000 a month to own, unless you think interest rates are going to go way down and you refinance, or you get a really good deal, I would probably just stay renting until things look like they're a little bit more optimistic or positive. And it really, again, it's very location specific.
Yeah.
I would not buy in all these areas that blew up: Miami, Austin, Las Vegas, Nashville. I wouldn't get near those places. Right now. Those places have another 10 to 30% downward trajectory before they flatline. And the other thing is there's no supply limitations in those cities. I mean, every 250 square feet of land in Miami you can build 1,000, condos. Austin can be built out. Vegas can be built out. There's no limitation on land in these places. So that's where you get crushed in real estate. If you're going to buy real estate, that's why Newport Beach does so well. There's just no land. And so if you buy something with good land in a place where there's limited supply of land, you're going to do really well.
So what's your investing philosophy for 2025 and 2026? What are you doing with your money?
Oh, I'm glad you asked. I'm putting it in 30-year treasury bills.
Okay, so we actually just talked about this, what was that, yesterday? You put how much into a 30-year treasury bill?
Well, I put $2 million into an ETF called TMF, which is like a leveraged. It's like so it'd be the equivalent of buying $6 million in treasury bills. It's 3 times leveraged. I'm just making a bet. Well, first of all, you get a 4.5% to 5% guaranteed return on your money. That's the yield because of the underlying asset, which is a treasury, so it pays you a yield. So you're already going to get a 4.5 to 4 to 5% return. Then if interest rates come down, which I'm very certain, I'm quite confident that they are, and treasury yields come down, so like a 30-year right now pays at about 4.8%. If that goes, let's say next year it's at 3.8%, which I think it will be, then my $2 million will be worth like $3 million. So you can make a lot of money on reselling the bond because if the yield comes down, the value of the treasury goes up. So you're getting your guaranteed return, and then you're making it's a little.
So what I was showing
but-
Jack is the day after you said that you bought into that, it was up about 4.5%.
Yeah, I made $100K on the day after my investment from that because the jobs report came in weak. Yeah, but this is a long term for me. So,
I understand.
I also like the stock market. I also have a lot of money in the stock market. I invested on Liberation Day. Remember when the market crashed? I put a ton of money in the stock market. So I'm not I like real estate. I'm more of an opportunistic investor. When COVID hit the market, I put all my money in.
Yeah.
So what's the most you ever lost on an investment?
Well, I bought 3 soccer cards like a year ago. This gold, it's 2014 Panini Prism Gold, Messi and Ronaldo. I paid $80,000 for these 3 cards. And then like 2 months ago, they'd gone up to like $275,000 and I sold them. And had I held like another 8 weeks, now they're worth like $700,000.
That doesn't count as you losing money.
In terms of like thought out investments, I've done pretty well on those.
How do you always make money? It seems like any time you say, "Oh, I'm buying this," it goes up.
You know
in
why?
value.
Because I don't listen to anyone else ever, really. I just think there's too many pundits, too much talk, and people overanalyze. I'm very simplistic. I take a very macro look at what's going on. Perfect example, my biggest investment ever. I put all my money into the stock market when it crashed in COVID. I thought this was an overreaction. The market's going to recover. No, of course it's going to recover. I doubled my money in 12 months. That's common sense. When the market crashed because of Trump announced tariffs and it went down like, I don't know, 20, 25%, I said, that's obviously an overreaction. People generally overreact. So I put, a ton of money into the market then. When Netflix was down to like, I don't know, I forget what it was, like $200 a share. I'm like, this stock has crashed way too much. This is a massive company. It's going to rebound. So put some money in that. Interest rates. It's pretty common sense right now. You don't need to like do you don't need to be a bond trader to figure out that the 30-year yield on an American treasury bill is 5%. You know what China pays their investors? That if you buy a Chinese 30-year treasury bill, you get 2%. If you buy a German 30-year treasury bill, you get 3.3%. And yet America, the most safe investment on planet Earth, far safer than a Chinese 30-year bond, safer than a German bond. It's arguably considered the safest bond in the world, is paying 5%. It doesn't even make sense. I know that there are reasons for that, like currency exchanges and inflation risk and like that, but that's when you get too much in the weeds. It's like, just shut up with all the details. Like macro approach, it doesn't make sense that you could buy a risk-free government bond and get a guaranteed 5% return.
You don't think there's any chance that the 10 or 30-year treasury stays high because people say the United States is printing too much money. Maybe there's a bit of a risk here with tariffs. Maybe we're less bullish on the economy. We don't know what's going to happen. Do you think there's any chance it stays
There's
higher
always a
than
chance.
expected?
There's no way that it's 100% guarantee. I'd say it's an 80% chance that the 30-year treasury is in the 3s. The yield is in the 3s within 12 to 18 months.
And what do you think that's going to do to real estate prices?
It'll increase prices, but it'll also increase supply. So I don't think it's going to be a direct correlation like, oh, interest rates are down. I mean, if interest rates go back down to where they were, which they will not, we would see a massive, increase in prices. Interest rates are not going to go back down to 2% or even 3%. If you can go out and get a 30-year loan at 4.5%, that's probably where we should be at right now. And I think we'll get there in the next couple of years. But again, the problem is it's going to increase a lot of supply. So you're going to see more supply come to the market, and you're going to see more buyers able to afford those houses. So it's good for real estate agents because we work on volume. I think prices will go up, but 5-10%, not 25%.
What about for the people who believe that AI could actually cause deflation? That we
I
get
believe
so
AI
efficient.
will cause deflation. Absolutely.
Think of all the things you buy every week: coffee, gas, groceries. What if all of those credit card swipes actually helped you earn Bitcoin? That's exactly why today we've partnered with Gemini to showcase the Bitcoin Credit Card, the only instant Bitcoin rewards credit card.
With this, every purchase you make earns Bitcoin back. That is up to 4% back on transportation, 3% on dining, 2% on groceries, and 1% on everything else. It's really one of the easiest ways to gain some exposure to Bitcoin because you just make purchases like normal, and instead of earning airline points that constantly get devalued, you get Bitcoin back instantly. There's also no market timing here. You're just investing as you spend.
And to put it in perspective, Bitcoin rewards earned and held for 1 year on the Gemini credit card have appreciated 277% on average. Obviously, crypto is volatile, but it shows just how powerful this can be if you're thinking long term. So if you want to sign up, head to gemini.com/iced, and when you're approved and spend $3,000 in the first 90 days, you will get $200 in Bitcoin.
You can also check if you're eligible with no impact to your credit score. All you got to do to get started is go to gemini.com/iced or use the link down below in the description to apply and start earning instantly.
See rates and fees in the description for more info. Thank you so much to Gemini for sponsoring this episode.
What about for the people who believe that AI could actually cause deflation? That we
I
get
believe
so
AI
efficient.
will cause deflation. Absolutely.
Wouldn't that then result in even lower interest rates?
Yes, it will. I think that AI is deflationary and puts pressure on, I will put pressure on the Fed to lower rates. I don't think we're there yet, but I think also it's going to create unemployment. And when unemployment is going to put pressure on the Fed to lower the rates. I think we're going to, within 5 years, we'll probably have, you probably won't have an Uber driver. There probably won't be truck drivers. And I think there'll probably be millions of other jobs. I mean, I think that Trump is bringing on a lot of, or at least he's trying to bring on a lot of onshore production manufacturing, because that's not going to be done by humans. I mean, I'm sure he'll say it's going to be done by humans and create jobs, but that'll be done by robots in 5 or 10 years. So now we'll actually be able to compete on a global scale in terms of production, because we're not having to pay, $30 an hour. You have a robot that's going to work 24 hours a day. That's three shifts. That's like it would take a human being 3 days to do what a robot does in 24 hours. And the robot won't make mistakes, won't have to take a break, won't have to go pee, won't unionize, a lot of other things.
So do you ever think that mortgages could get back down to 2%?
I mean, of course they could. I would be very surprised if in the next 20 years we see, if you can go out and get a 30-year fixed at 2.5%. That would surprise me if we see that. If I see that again in my lifetime, I'll be surprised.
So if someone wants to have some exposure to real estate in their portfolio, what is the best way of even going about that right now? If they like commercial, is it like single family home residential? Would it be like, investing in real estate oriented ETFs?
Those are the most simple. The ETFs are the most simple, to be honest. But if you want to listen, it is not for the wary of heart to own a property, let's say in Los Angeles, that has tenants. I mean, you're just asking for a nightmare problem. But I will say that this is probably the best market that I've seen for a buyer to come into LA and buy multifamily. I mean, I look at it myself just because it's so intriguing. You can buy, I saw a property on Lexington, which is in Hollywood, 20-unit building. This just shows you how big of a problem, the tenant restrictions are in LA. 20-unit building, 11,000 square feet interior square footage. And I could have bought the building for $2.8 million. It sold for $2.8. I wrote an offer of $2.5. They didn't. They sold it. Rightfully, good for them. They got $2.8 for it. That's insane. That's.
So what is that per unit in Hollywood?
It's $270 a unit. $270,000 a unit, which is, by the way, this is what the government should be doing. If we're trying to, I think the homeless problem is a lot more complicated than housing. The truth is, we have more housing now per capita than ever before, because we had 600,000 people leave LA. So it's actually the equivalent of building 600,000 homes, but yet homeless is worse. So it's not a direct correlation to housing. I'd love to see the city go out and buy that property and house 20 people for $270,000. Instead, what they do is they have a deal with union, where union supports the Democratic politician, and then they run on some platform to build homeless housing with unions, and then those condos cost about $1 million to $1.2 million to build. So, and they never even get built. But even if they did get built, it would cost the city $1 million to house someone when I could have gone out and bought this 20 unit at $270,000 a unit.
Does it ever work when the government funds housing for homeless people?
The government is doesn't do much right when it comes to the homeless. There's a lot. Listen, I've been working and volunteering for 15 years for Food on Foot. It's a private organization, which I like. And there's so many good people that work there. So I also think that most of the people in the homeless industrial complex, which is just this huge monstrosity in LA, are all good, well-intentioned people. But I think the problem is that they're not willing to take a step back and to try to figure out a new approach. People are just so stuck in their ways, and they just double down and just keep bulldozing through without pulling back and saying, "Hey, maybe there's another way to do this." It's a lack of critical thinking. I think it's been a downfall of that sentence alone probably explains 90% of the problems in the United States and the world. It's just a lack of critical thinking.
So what do we do in terms of a housing shortage? That they say we're short like 6 million
There's not
units.
a housing shortage. And housing is not unaffordable any more than it was for the last 80 years. If you look at the actual facts, there's actually at least as much housing now per person in America as there has ever been. So people don't usually know what they're talking about when they throw these things out. They just read like a CNN headline. In terms of housing unaffordability, not true. If you look at what it costs to rent a 1,000 square foot 2-bedroom apartment, as I'm just using that as an example, from 1930 to today, and you look at wages from 1930 to today, it is almost a perfectly correlated, similar line for the last 95 years in terms of how much it costs to rent a 1,000 square foot 2-bedroom apartment in Los Angeles or in America. So there's always talk about it's more unaffordable than ever before. It's actually not. It's actually the exact same and has pretty much followed. Wage inflation has followed rents. And by the way, people talk about, it's like a clickbait to say housing is so unaffordable. When interest rates are high, like they are now, of course, buying a house is, of course, more unaffordable to the wage than it was 5 years ago. So if people say housing has gone up the cost of housing has gone up 60% in the last 5 years. No, it hasn't. The value of a $500,000 condo 5 years ago in LA is worth $500,000 today. So it's gone up zero. The cost of buying it because interest rates are up means that it's going to cost more of your wages. That is a fake argument because when interest rates go down, did we fix the affordability problem? No, that's just another way of saying interest rates are up. That's not fixing the problem. That's the problem with trying to fix most things in America. It's just talking points. People yelling about things that they have no idea, like affordability and cost of housing. They don't really. If you go on ChatGPT and you spend 30 minutes asking it to analyze these facts, you'll actually learn that housing is as unaffordable today as it was for your grandparents.
Is this what ChatGPT told you?
I've actually, my brother and I did a full analysis on chat, about 30 minutes about this very issue because we wanted to learn. Nobody does that, unfortunately, but they just watch CNN and see a headline about unaffordability. They don't even know what it means. They're like, CNN doesn't even say, is this buying a place?
So
is it renting a place? You have no idea.
Here's how they compare it, is that they say it used to take 2 to 3 years worth of wages to purchase the average house. And now it takes 6 years to 10 years worth of wages to purchase the average house. And that's how they calculate the cost of living and the affordability index.
Well, first of all, the affordability index should be, that is, when you're talking about buying, that's interest rate dependent. So for example, then according to that logic, you could say cost of housing has doubled in the last 5 years. But that's nonsense. Interest rates have doubled.
Throughout the 70s and 80s, though, interest rates were 15%, but the cost of the house
that's why
itself is like
that's why you
$150,000.
should use rental. That's why you should, because rents are not as tied to interest rates. So to me, I think the real question is, how much of the average person's wages does it take to rent a 2-bedroom, 1,000 square foot apartment in X city? That seems to be the more logical way to do it. And actually, there are arguments now that there are 2 people working in households, whereas 1 generation ago, 2 generations ago, it was just one, usually the man. So there's only one income. So there's an argument to say they actually cost more of someone's wages back then than it does today because there's usually 2 earners. But again, that's the thing. It gets so complicated and no one likes talking about complication. But the bottom line is there's not an affordability crisis. It is housing, renting a condos or renting an apartment is just as unaffordable today as it was for your parents, as it was for their parents, as it was for their parents. That's how similar it's been for four generations.
What about for the people who say that they should have a right to be able to buy something? Well, and that they don't want to be stuck
don't even get me
renting
started on entitlement. I mean, everyone's entitled to, everyone thinks that they are entitled to the American dream when you're entitled to an opportunity to work hard and achieve the American dream. That's much different than just being entitled to the American dream. So I don't, my response to people who even use the word entitled is, no, you're not. None of us are. I mean, you're entitled to equal opportunity. I think that's a fair statement.
So how much success in real estate right now when it comes to buying is due to strategy versus timing?
It depends on if you're going to hold long term. If you're going to buy long term, I don't think timing is important. Same with stocks. I don't think it matters. Like, I'm an opportunistic buyer in real estate. I'm an opportunistic buyer in the stock market. So I'll buy in a crash. And by the way, if you want to buy real estate and you're not going to hold it for 30 years necessarily, buy in a crash. Buy stock in a crash. Everyone always overreacts. So just wait for the next wave of lemmings to overreact.
Yeah. Speaking of being a contrarian investor to a certain degree, as I was speaking with a guy who was a prominent investor in San Francisco for the last 30 plus years, who said he believes now has never been a better time to buy in San Francisco. And he's actually making a ton of offers, and he's getting properties for 30 to 50% less than he could buy them for in 2018,
Commercial
2019.
or residential?
Both.
I
He's buying parking lots,
I don't disagree.
land,
I don't disagree.
properties, and he's like, this is the best opportunity for me, even though a lot of people are moving out. Businesses are moving out, but like, this is the time you want to buy. And I almost look at this in LA because I've seen some of these deals that you were talking about. Like there was a 7-unit in Santa Monica that I saw for 3.5, and I thought it was worth 3.5, and it had sold years ago for like 3.8.
Yeah.
They're taking a loss on it. It's a great deal. It didn't sell after 6 months.
Yeah.
And I was thinking, man, at 2.8, if they take that, it's a killer deal. But they just didn't sell. So maybe now is a good time to buy into these places because everyone like us is overlooking it to a certain degree. I know you're still making offers, but like, I would look at this and think, I don't want the hassle anymore. But it's a pretty attractive price, all things considered, today.
I agree with when people are not doing something is usually the time to do it. I don't disagree with that investor in San Francisco. I don't think it's a bad idea for the only thing that concerns me is I don't want to be dealing with the problems. I don't want to deal with the lawsuits. I don't want to deal with the phone calls. I don't want to deal with all the risks and insurance and tenant that goes on in owning a property. So for me, it's not worth it. 15 years ago, I had the hustle for that. Yeah, it's great for like a young person, and at 23 years old has some money, or 28 years old has some money, wants to invest in multifamily. I would buy it. I would go buy right now in LA. It's probably the best time to buy multifamily. I
was telling Jack about this.
And by the way, don't look at the returns right now. Look at the appreciation, because when interest rates go down, that $2 million 10-plex will be worth 2.5. So that's how you make money in multifamily, because you raise rents, but more importantly, the cap rate will be affected by interest rates.
Speaking of that, though, I was telling Jack the other night about a new legal scheme that seems to be going on throughout California. It's tenant habitability issues. So they could basically claim my unit's not habitable because of insects, mold, whatever it might be. And then they claim a code violation with the city, and they try to settle with the owner. And this is usually common on like larger apartment buildings, like 12, 20 units plus. They settle with the owner because the owner knows they're going to spend 20 to 50 grand defending themselves. So it's let's settle for 20. Done. Now, the lawyer on that case could send a mailer to every other tenant in that building saying that this owner was found to settle this case. You might be entitled to money. And now every single tenant can now file a claim against that owner.
Yeah.
Potentially bankrupting the owner. And that
we've gotten far too litigious. I think the problem is that these lawyer organizations, they just fund these Democratic politicians. And so the politicians keep laws in place to allow all these lawsuits.
So this is something that Jack actually brought up because he said, who's lobbying for this? And there's a new ordinance that came throughout Los Angeles recently, where now you have to put it in a common area of any rent-controlled property that said the tenant is entitled to free legal services. Here's the number, and it needs to be displayed at all times. And if it's not properly displayed and the tenant falls behind on their rent, you can't evict them, because that whole eviction case is going to be thrown out because they didn't know that they had an entitlement for those legal services. And Jack said, who comes up with that?
When you go too far in one direction, tenants will abuse the system. And I know that it's like, you're not supposed to say anything negative about tenants. Oh, well, and here's the other thing too. So LA, in all of its wisdom, just passed a new law saying that renting out this house as an example, I have about $500,000 worth of furniture and art in the house. And so I charge $33,000 a month, and I charge a 2-month security deposit, $66,000 on $500,000. City of LA says, no, I can only charge 1 month security deposit. Even if the house is furnished, I cannot charge any more money for a furnished house versus an unfurnished house. That's LA in all their brilliance, because they were trying to protect, ostensibly trying to protect someone in like the $1,000, to $2,000 a month price point, and they wanted them to be able to afford their security deposit. So now they're limiting people that have $10 million homes from getting a 2-month security deposit from another millionaire. Like it's so illogical. And here's another problem too. I now can't sell that house. Up until a year ago, I could tell the tenant, hey, your lease expires in February. When you move out, I'm going to put the house on the market for sale, and I'm going to sell my house. Now I cannot get rid of that tenant. That tenant can now live there forever. Indefinitely. Yeah. You cannot get a tenant out just because you want to sell a property. That's no longer just cause eviction. So how
can you get a tenant out?
You can never get a tenant out in California.
I was telling
you cannot. But what you have to move? I'd have to personally move back into that house
for 2 years.
For 2 years, but I don't want to live in that house. That's the only way to get. Otherwise, that tenant can live there forever. Even though he's paying $30,000 a month, LA thinks that they need to protect that tenant and not allow me to sell my own property because that tenant's lease expired, and yet he's allowed to continue to live in my house and pay $30,000 a month.
You literally can't say, here's a 90-day notice. You can't say.
Nope. In fact, what happens is the tenant will go, oh, you want to sell your house? Give me $200,000. And then I'll move out. That's what happens because they have all the power now.
I was telling Jack,
so stupid.
If you make too many offers to the tenant, a cash for keys, they could now sue you for harassment.
Yeah, and also now, if you enter into a deal for cash for keys, and you pay a tenant, let's say $20,000, to move out, and he moves out, he can move back in the next month. He can say, "I changed my mind," and move back in. He has to give you your money back. So you can't even actually conduct business. You can't even move along with the understanding that this signed contract is enforceable. The tenant can change their mind.
There should be an exemption for luxury properties.
Of course there should be. If you have...
Well, you should just be able to kick someone out of your own property.
Well, it's just common... That's what I'm saying. They've lost common sense. So as an example, if someone's paying over $10,000 a month in rent, they don't need the city to be managing security deposits. They don't need the city to tell them that they don't have to move out at the end of their lease. I don't know why the city is promulgating codes protecting millionaires. They don't pass these things to purposely harm economic activity. They just aren't smart enough to figure out all the damage they're causing.
It does appear as though that's probably something that's just lobbied by lawyers, because the more regulations, the more loopholes, the more layers of paint that they put on this mound of regulation is just another thing that they can exercise to get more profit, basically. They're just like, oh, this one code, oh, this code. If there's a million codes, they have a million choices to be able to try to,
well, I think it's
execute on
I think it's different. I think it's tenants' rights groups, well-intentioned, say, hey, there's a here's another example that LA did. You can no longer discriminate on tenants based on criminal history. So I don't even think you can even look up criminal history now. I don't think you can. So if someone committed like a crime and you find that out, you cannot say, oh, I don't want to lease it to you because you burglarized a house or something like that. No, you have to lease it to them. That doesn't make sense. That's not helping anyone. That's just creating inefficiencies in the market.
What if they committed a crime of fraud?
Like,
there's no carve-outs?
By the way, Jason, I do want to correct you on something.
Yeah.
The term now is justice involved.
What is?
It's not a criminal.
It's not a criminal. It's a justice-involved individual.
Shut up.
Jason, look it up.
I don't care.
I'm being 100% serious.
You're gonna be
I don't
canceled.
care.
You
I'll
can't.
be canceled then. I'm not saying justice
I'm
involved.
being serious though.
I'm being serious.
You cannot call them a criminal. It's a justice involved individual.
Well, you can. What I'll do is I'll say criminal, and then my mouth will go justice involved. If I know that a tenant committed a violent and burglarized someone and committed fraud, I can't be like, oh, I don't want to lease my apartment to you. The city says that I'll get sued. I'll get sued for discrimination if I don't lease out an apartment to a violent felon who's committed a violent crime or a fraud.
So what about a sex offender?
Let's say that he lived in another apartment building and burglarized the other tenants and committed fraud on the landlord and then beat up one of the other tenants. I cannot discriminate against those acts. I have to let him lease my property.
What can you choose? If you put a listing out for rent and you get 15 applicants, how are you able to choose which one you rent?
Well, based on their job, I think just based on their employment and their credit score, maybe.
But what if you have 10 people that apply that all qualify?
Yeah, then you'll get sued. We have a case right now where a client had a bunch of applications, picked the best one, and there was another person that applied for the property in a protected class that was losing their job, and he literally stated that they will be unemployed in 60 days. And they didn't choose that person because of that.
So this person, they basically put out this listing. They got a bunch of applicants, and then they went with the most qualified individual.
Yeah, and now they're getting sued.
And now they're getting sued by someone.
In a protected class, yes. Even though that person said they were losing their job.
Now, isn't that just a money grab, though? I don't think it's an
95% of lawsuits are a money grab. No, I'd say 95%. Because they know it's usually suing a wealthy individual or landlord or company or whatever, and they know that that person is going to spend $50,000 to $75,000 in legal fees and a year and a half of their life defending it. And so the person thinks, oh, I can get a quick 20 or 30 grand. I mean, that's 90+% of lawsuits. That's a problem with how litigious we are, is that it's so easy to make a claim and it's so costly to defend it. So you just see, that's why I think 98% of cases are settled. It's basically legal extortion.
What could be done about this?
I mean, I think higher bars for lawsuits for sure. I mean, I'm not exactly sure, but you know what I think would probably be the easiest way to solve this? If you lose a case, if you bring a claim and you lose, you should be responsible for the other person's attorney's fees.
Yeah.
That law alone.
But they're going to say that low-income people who justifiably should have a lawsuit against someone and win, who don't have the resources to do that, might be less likely to file.
Okay, well then you can do it this way. You can still take a case on contingency if you don't have money, but that contingent lawyer, then has to be responsible, taking the risk. Not just the risk of his time and energy and money that he spends on the case, but also the risk of having to pay the other side's attorney's fees. Because the problem is this too: lawyers will take any case because they know that they can settle out for 20 or 30K.
And then,
so they should be. So I should, let's say you get sued, Graham. You should be able to say, you know what? I'm not going to settle for 20 grand because I'm 100% right here. I'm going to spend the $50,000 to defend this, and then you're going to have to pay me back. That lawyer should be responsible. So if that lawyer thinks that case is a case, he's not going to take it. Now a lawyer will take a case because he's like, oh, I can shake this wealthy guy down, and he'll settle for 30 or 40 grand. I know he's not going to go to trial. But if there's a risk of having to pay that other side's attorney's fees, then they wouldn't do it. Then lawyers would only take good cases because they don't want to take that risk of losing.
Do you think that's ever going to happen?
No, because I think that attorneys lobby so much to make sure that doesn't happen because they love all this litigiousness.
And what's going to be the result of that? Just no one buys real estate. People are afraid to put themselves out there.
It creates a disincentive for legitimate action. It's a economic disincentive. But you want people to be able to act freely in a capitalist manner, right? You don't want to create friction costs. That's a friction cost like insurance. Let's say insurance was 10 times higher than it should be. That's a friction cost. This is essentially an insurance policy. I mean, because every time you do something, you're thinking, I could get shaken down, I could get sued, and I'd have to spend $100,000 to defend it. I mean, there are a lot of problems in California. I can't solve them all, but that is probably the way to solve how litigious we are.
And what do you think are the best opportunities going forward right now? In terms of
investment?
the market, investment, real estate?
So I was buying real estate every year, but mostly I was buying real estate because interest rates were so low. And now that's gone. So I'm not really buying real estate right now. So I don't know if I'm going to sit here and just recommend, buying real estate as an investment. I mean, I think it's a fine investment in the long term. It's going to go up 5, 8, 7% a year. Truthfully, though, I think the market right now is probably going to go up 5 to 10% a year for the next few years. And
That
you
seems pretty
don't
good,
have to
though,
deal with
5
tenants,
yeah.
And maintenance. So I'm probably going to leave my money in the stock market and put my money in 30-year treasuries, and just hang right there for a little while until I see another opportunity. I will say, if you are glutton for punishment, you should go buy multifamily in San Francisco or Los Angeles, because it's so low right now. You could spend $5 million in multifamily right now, and you're intelligently buying. That'll be worth $7 million probably in 3 years.
Hiring always sounds so simple. That is, until you actually have to do it. Trust me, we're going through it right now. You wait for the right candidates, dig through stacks of resumes, and half the time, the people you reach out to aren't even looking for jobs. It's such a grind.
Well, the future of hiring looks much brighter because our sponsor ZipRecruiter's latest tools and features help speed up finding the right people for your roles. So you save valuable time, and right now, you could try ZipRecruiter for free at ZipRecruiter.com/ICH.
So instead of chasing candidates, ZipRecruiter's smart matching technology works for you, instantly connecting your job post with people who have the right skills and experience. They even invite top candidates, so you're not just waiting around, and if someone really stands out, you can unlock their contact info and reach out to them directly.
Over 320,000 resumes are added to ZipRecruiter every month. That means you're always pulling from a fresh pool of talent, whether it's entry-level or highly specialized roles.
It's really no surprise that ZipRecruiter is the #1 rated hiring site based on G2.
And the results speak for themselves. 4 to 5 employers who post on ZipRecruiter find a quality candidate within the first day.
So if hiring has been slowing you down, save yourself the hassle with our sponsor ZipRecruiter at ZipRecruiter.com/ICH. Try it completely for free. Link in the description, ZipRecruiter.com/ICH.
Again, that is ZipRecruiter.com/ICH with the link down below in the description. ZipRecruiter, the smartest way to hire.
Remember that doctor's appointment you were supposed to make a long time ago? The one that's been probably sitting on your to-do list for weeks, maybe months? Maybe it's just an overdue annual checkup, a weird rash that you keep Googling, Graham, or it's your dentist reminding you it's been 2 years since your last dental cleaning. Trust me, we've all been there. Booking a doctor's appointment has always felt like such a hassle until now.
That is where our sponsor, ZocDoc, comes in. For those unaware, ZocDoc is a free app and website that allows you to search and compare high-quality in-network doctors and book an appointment right on the spot. You can also filter by insurance, location, medical specialty, and even look at what verified patients have to say about them so you know exactly what you're walking into. And then once you find the right doctor, you could see their real-time availability and book an appointment that works for your schedule.
And appointments made through ZocDoc happen fast, typically within just 24 to 72 hours of booking, and you can even score same-day appointments. So stop putting off those doctor's appointments and go to ZocDoc.com/iced to find and instantly book a top-rated doctor today. That is ZocDoc.com/iced, ZocDoc.com/ICED. Thank you so much to ZocDoc for sponsoring this episode. Link in description. Do you think that there's anything to the philosophy that people that are really tight with their money have less opportunity just coming to them because they have more of a scarcity mindset, as opposed to those who have more of an abundance mentality? I know Graham was telling me that you are totally fine overpaying for whatever. Like you don't even really consider it.
I was talking about the Ford GT, and I'm like, Jason, you might be overpaying by 20, 30, and plus sales tax on top of that. If you just wait and you're like, dude, I don't give a I'm not going to waste I just want the car.
So I have always I had a lot of what's the word?
Risk tolerance.
Tolerance. Yeah, thank you. I've always had a lot of tolerance for risk in my investments. I'm okay losing money. I think in order to make money, you have to be pretty risky. If you're too careful, if you have $1 million today and you are a careful investor, you'll have $3 million in 20 years and at best. Maybe, honestly, not even that. You probably have $2 million in 20 years. And a more aggressive investor would probably have $5 million in 20 years. So it's a big difference. I'm a believer in taking risky investments, not stupid investments, but like, again, this, a lot of people told me not to invest in TMF because it's 3 times leverage. And it's like, who gives a shit? So I'm taking, I believe strongly that the treasury yield's going to come down. I mean, I think that's an intelligent risk. I put a ton of money into the market on when Trump announced the tariffs and the market crashed. I think it's very intelligent to believe the market's going to recover. I think that's I guess you're taking a big risk, but I think those are calculated.
It's not just that though.
Risk.
I think it's overall, from what I've seen, you spend a lot of money. I mean, at least compared to what I'm used to, the dinners and the experiences and the cars and the houses and the trinkets and the watches and the going out and the entertainment. It's like I remember seeing some of this.
I don't have kids, and I don't need to die with money. I mean, I worked hard and continue to work hard to have fun. I think money doesn't do anything sitting in my bank. I am all about spending my money. As you well know,
but
I'm not shy about it.
Do you think that's giving you more opportunity than, let's just say, me on the other hand,
it's
who's
giving
like,
me more happiness. I don't think it's giving me more opportunity.
You don't think that you've
going out and buying I just bought a Rolls Royce for $500,000. I don't think that's giving me opportunity.
Do you think
it's fun as shit?
But the abundance of living that life, I do think, I'm a pretty firm believer that it does end up somehow coming back to you. Maybe in the way of like someone sees you in a Rolls Royce, you get a connection because you're wearing a watch, or you go to a fancy dinner. And so instead of staying at home, you meet someone and then you do deals with them, you develop a relationship, you enter that web of people. Or it could be in such a way of just like what you put out is kind of like, what you
back.
get. Yeah.
I mean, I don't want to go there because I think there are too many people that shouldn't be doing that pretend that they're wealthy and they're running out there and buying bottle service and dumb shit. So I wouldn't encourage that behavior unless you can afford it within your means. Also, if you have a family and a wife or whatever, then probably not the best idea. I purposely don't have kids because I want to go around and I want to buy a Ford GT and a Rolls Royce. And I want to go fly first class to wherever with my girlfriend. I mean, that's, to me, I don't understand how people work hard and have money and don't do that. I really don't get it. I think they're fun. They're fun coupons. That's what money is. They're fun coupons. Why are you leaving fun coupons in the bank? Go use them to have fun.
If you're rich, what's the best thing to spend money on?
There's not one thing. I think clothes.
Really?
I think people say that's the lowest ROI.
No, I love clothes. I love cars. I love travel, food, but you can't spend that much money on food. Let's be honest. I mean, you can't go out and buy a $500,000 dinner. You can buy a $500,000 car. So I'll say travel. Definitely travel. Spend $100,000 on a European vacation. But I will say arguably the most fun that I have with my money, best ROI, is spending it on other people. I love being able to do things with my friends. I think it's great that I can provide opportunities for my friends, traveling or dinners or whatever that they wouldn't otherwise do. I also don't understand why people who have money, to me, if you're at a dinner, the person who's least affected by paying the bill should pay the bill. That's that simple. If you're out traveling, it should be based on who's least affected.
Well,
it's a utilitarian argument.
We picked up the bill just a couple days ago.
Oh, for Mexican food?
The iced coffee hour picked up the bill for the Mexican food.
To be fair, I told my staff to pay it, and then they said,
did.
"Oh, hey, Graham paid it."
Yeah, you did.
And by the way, it does not count. Don't bring up the fact that you finally bought lunch. 15 years of me buying lunches, and I got to hear about the one Mexican restaurant you guys.
I'm never going to live that down.
And Pinche's Tacos, by the way, does not count as dinner.
What does it count as?
That's like a cheap lunch. That counts as like a half a lunch.
Okay, so it's mostly spending the money on other people. That's the highest fun
I'd say that's probably
ROI.
The best ROI. Yeah, I mean, because two people get the enjoyment. I do something nice for my girlfriend or my brother or a friend. I get the enjoyment of it, and they get the enjoyment of it. I think it's a great thing. If you can afford to do nice things with your friends, I think that's awesome.
What do you think is the optimal amount of money to have?
That's an interesting question. You don't want to have so much money that everyone's angling at you. and you can't even have a normal conversation with someone. Maybe 100 million, maybe. The other thing too is once you have so much money that you can, total fuck you money, you can do whatever you want. I don't know if you appreciate it as much. So I'm not going to say a dollar amount. This is what I'm going to say. I think the goal is to continually increase your net worth so that you can continually get nicer and nicer things. And so you can continually appreciate those nicer and nicer things. The last thing you want to do is, one, have so much money that you stop appreciating things, or two, you have a lifestyle and that you have to come down. So I've always found that, like, a perfect example is I now drive a Rolls-Royce Cullinan, but I didn't just go out, and that wasn't my first car. That would suck. You start out with a Rolls-Royce Cullinan SUV. There's no better car out there. So I started with, I don't know, I forget what, who cares what my first cars were, but up until, finally I was able to get a Bentley, like 5 years ago. And then 5 years later I got a Rolls. When I got into my Bentley, I'm like, oh my God, this thing is amazing. And now I'm in my Rolls, I'm like, oh my God, this thing is even better. So you just want to keep living to where you can continually increase your quality of life, and then you will appreciate it every time. I never want to come down. And also, I guess you don't, if I had $50 billion, I mean, I don't know, then you can do anything. So then nothing's fun. You know what I mean? I like there to be things I can't do. I cannot go out and buy a private jet. So I like, it's nice to be able to not do everything. I don't
feel
know.
like theoretically you could buy like a $6 million private jet.
Oh, yeah, but then you're stressed out about the costs and the use. You know what I mean? That's stressful. That would be stressful for me.
So how much money do you need?
Stressful.
How much money do you need to buy a private jet?
100 million. Minimum 100 million. Probably 200 million to even start thinking about a private jet.
Okay.
Yeah. I'm not there.
What if you traveled a lot? You used it like a few times.
First of all, I'm not even. If you travel a lot, like to Europe and what you're talking about, those private jets cost like $30-40 million. You got to be worth like $400 million before you're stepping up like that. And I'm not even a huge fan of flying private because I get nervous, turbulence, and then the pilot's not going to be probably as good as like a commercial pilot. And the bigger the plane, the safer it is, the less turbulence. I mean, more crashes on private planes than commercial planes.
What's the biggest lesson you've learned about money that nobody teaches you?
I mean, I would say that money does buy happiness. People tell you that it doesn't. I think it does. Doesn't guarantee happiness. I think that's what the saying should be. Money doesn't guarantee happiness, because that's true. Money definitely buys happiness, though. And I think that maybe people don't realize that money is meant to be spent. I mean, I think you're on this planet for only so many years. I don't understand how people are wealthy and don't spend it. And then the other thing is, I guess, circling back on this, spend it on your friends. I encourage my mom.
Yeah, Jack.
My mom has, I beg my mom to spend money. She's buying a Porsche right now. I mean, she's never had a nice car. She hasn't had a car, over 100,000. Well, probably, I bought her a Mercedes for 100K, but before that, probably, she has a pickup truck and she's got money now. I'm like, Mom, like, she doesn't spend money. I beg her to spend money. I actually have long conversation with her. I think that some people need to be encouraged to open up and enjoy the fruits of their labor. I don't know why so many people have money and don't spend it.
So what's your advice to me?
Yeah.
Because here's how I look at it.
What are you going to do with your money? Are you having kids?
One day. Here's how I look at it. I see the amount that I have invested, and I just think I could spend 3% of it a year and not run out. So that's kind of what I base everything off of. But then I think if the market falls 50%, I don't want to go down in lifestyle. So that 3% now turns to 1.5%. And I spend that. That's it. 1.5%.
Wait, but does that assume that you're not making any money?
Yes. So
but
everything.
You are making money.
Yeah. So that adds to the top. And then I could spend 1.5% of what's invested.
Well, but then you have to figure out you also have to minus how many years you have left. Right?
Yeah, 50 plus years. But I don't want to run out. So 1.5% over 50 plus years, assuming my expenses keep going up every year.
Assuming a return of how much a year? 5%?
I do 5 to 6%.
To me, this sounds borderline mental disorder.
No, I don't think that.
I think 1.5%.
If the market falls 50%, I don't want to be affected by it. I don't even want to think about it. I want to be like.
I think I think what you should do is be diversified enough that doesn't happen.
Oh, I am, but
you can
there
hedge.
could still
Let me
be,
give you a perfect example
Yeah.
of how you can hedge that. I'm really pitching 30-year treasuries.
the inverse, 3x leverage.
Buy a 30-year treasury. Why? Because if we go into recession, what's the Fed do? Lowers rates. So you could put in I'm just going to say you have $20 million. You don't have to tell me what you have. Let's say you have $20 million. If you put 10 of it into 30-year treasuries, then you're guaranteed a 5% return, which is pretty solid. And you're also investing that to some degree because if rates go down. But it's a hedge against inflation. It's not a hedge against inflation. That was stupid.
Against the market.
It's a hedge.
Going down.
It's a hedge
True.
against a recession.
Right.
So if the market goes down and we got unemployment and hitting the fan, rates are going to go down. So have a balanced portfolio, and then you don't have. There's no way you're going to lose 50% of your money.
But
then you're 20. Then you could do 25%.
But I still think there could be a small chance we turn out like Japan. It just goes down for like 30 years.
Well, didn't rates go down in Japan? Yeah, they went to like 0.
Yeah, correct.
So again,
but the market's going down at the same time.
I know, but you can. My point is, you can hedge. That is a perfect hedge. I spend money to remove stress. I'm overstaffed. Personal assistant. I have a stylist. I don't do anything anymore. I love that. I think there's no better way for me to spend money than to have somebody pack for me. Why do I want to, or go to the grocery store for me, or get my, dry cleaning or my shoes cleaned? Why do I want to be driving to drop off my shoes to get cleaned? Or it's a dumb argument. I know I'm sounding like a douchey guy, but I mean, why do I want to be doing anything? And that's the best thing for
Graham will
like,
lose sleep over a quote that he gets from a contractor that's like $700 more than what he thinks. Like he will literally lose sleep. And then he'll have a podcast the next day and he'll be like groggy and people will comment, Graham looks tired.
One of the things that I've done to change Graham is I used to be so difficult about contractors. And I always used to think I was getting, and I would negotiate them and get a second bid and a third bid. And guess what? You are getting like 90% of the time. I have now, it's less about money for me. It was more about psychology. You know what I mean? I was feeling like someone was getting one over on me and I was being treated unfairly. And now I'm like, you know what? I'm wealthy enough that who cares? What's the worst case scenario? This is the way I think about it. The worst case scenario is this contractor who's working hard is charging me $1,400 for a $900 job. So I'm giving this dude $500 more than I should. Is that the end of the world? It's going to that guy and his family, and it's increasing his quality of life a hell of a lot more than $500 is going to increase my quality of life. Just look at it as like a tip, just a massive tip for a hardworking dude. And I'm just way happier when I look at it like that. I just don't mind getting as much.
How I look at it is that I don't spend that extra $500, and I think when I spend that here, I could have done all these other things that I purposely didn't do because I'd rather just save the money, and then it just goes away.
Think about it like from a utilitarian perspective. Who's going to have more happiness from that $500? You or that dude?
That dude.
That dude.
Yeah.
So worst case scenario, when you leave this planet, you have just made other people happy. That's the worst case scenario for you. That's a good way of looking at it. I really don't negotiate as much as I used to. I don't get, second and third bids. I tip like crazy. Tip $100 to everybody. I mean, so the bathroom attendant or the valet is going to get $100. Do you know what he's going to do with that? He's going to take his girlfriend to dinner and have a whole good night. What am I going to do with $100? I don't even know nothing. I don't know what you can do with $100. So
buy tacos.
Yeah, exactly. Buy Graham lunch. So that I think you have to look at it like that's the same reason why I buy dinner. In 10 years, I don't think I've never not picked up a tab unless, someone's adamant about it. Because it doesn't affect me and it affects other people. I would always look at it like that from a utilitarian perspective. And it feels good. Yeah. It feels good to
the main
be generous.
thing that I see is like, sure, Graham could be spending money to increase the quality of his life, but at the same point, the thing that it sucks to see is when he's stressed out over these money issues, and he's on the phone with contractors trying to negotiate something down and on hold for an hour, and he's like clearly stressed out, and he gets anxious, and he gets angry, and he gets all of these negative things.
What about hiring a personal assistant that just does all of that for you? Just to pay a person $100,000 a year.
The thing is, it comes up so infrequently, and it's so like last minute. Where today I have nothing, but then it could be one phone call at 4 p.m. that just comes out of the
Well-
blue. And now it's like, I really want someone to come over, like have
quality
to
of
deal
life
with someone.
is more
and, like,
important than money. If you have the money to not have to worry about that, then and you're still worrying about it, then you're not using your fun coupons appropriately, Graham. They're really meant to be like to de-stress. I have very little stress in my life. I use money to de-stress my life. That's the best thing you can use it for.
I'm still rooted to like how much I feel like $1,000 is for, like, because I remember like $1,000 commission early on would be like, oh wow, I could do this and this and this and make this last and invest it here. That just having it go away in seconds feels like it's
Bro,
irresponsible.
I know you have a problem because I went gambling with you and you lost like $30 and he got so upset. And I was like, dude, you don't. This is not fun. I'm like losing like $7,000 and I don't even give a shit. And Graham lost $30 and he's like, I'm done. I'm so done with this. He's so upset. I don't know, bro. We're cut from a different cloth. Also, the other thing too is, I think that you would be just as happy with half as much money. I don't think you would really.
Yeah.
So I think you should spend the shit out of it, bro. And the other thing too is, like, I bought that the $450,000 Ford GT. That is not spending $450,000. Just like, or my Rolls Royce, or, you know, I buy baseball cards or whiskey, like whatever the it is I'm buying, or artwork. It's not like I can't sell it in the future, or a watch. Let's say I buy a $30,000 Rolex. Someone's like, "Oh my God, you spent $30,000." No, I spent $5,000 because I'll probably be able to sell that thing in a few years for $25,000. So who cares? So I only look at it as spending $5,000. All I do is look at how much money I'm losing. When I bought that Ford GT, maybe I'll lose 50 or 70, maybe I'll lose $100,000 max, you know, with taxes and maintenance, and I'll have it for, let's say, 10 years. So I look at that as spending $100,000. I don't look at it as spending $500,000.
How has the show Selling Sunset changed your perspective on everything?
I wouldn't say it's changed my perspective that much. No, I mean, I think it's made me wealthier, you know, and more of a public figure. I don't think it's changed my perspective on things.
But has anything changed when you go out now and that you're recognized all the time?
Yeah, but I don't think that changes my perspective. I mean, it changes my life in as much as I'm taking, you know, photos with people when I'm out. But other than that, it's pretty similar. If you took away me taking photos, 99% similar as my old life, you know? Although also I think it's helped me build my business and my career. So I'm wealthier because of that.
Yeah.
But no, I don't think I'm a different person. I mean, shit, you've known me since way before the show.
Same. You've mellowed out though a lot.
That's not from the show.
Okay.
The show stresses me out. Mellowing out, I think, is therapy, years of therapy, and which I probably credit more than anything. But then learning not to stress out over things. I think perfect example, like if I got a contractor bid of $1,400, I would immediately get a rush of cortisol. I would be, this is probably only $800. Show me the labor, you know, show me the parts. Let me get a second bid. And all of that would be anxiety and stress and cortisol. And I literally have in my phone, don't sweat the small things. I know that's kind of cliche.
Where do you have that?
Look, I just opened up my phone. It's on my notes. So it's my.
You know, it's so funny you did that. I'm gonna show you this. For every decision I make, I go through that. Return on hassle.
Ah, yeah.
Like how to spend.
Good for
money.
you.
Yeah,
Screenshot.
That's very. I'll read like 4 or 5 for the people watching here. Well, some of it's, you know, about me being a boss, so I'll skip that. Be a positive personality, and then I put like my dogs, like Nico, Zelda, Thor, because my dogs have the best personalities. Don't be too hard on yourself. Set an example. Compliment, appreciate, and validate people more. Be more serious. Be more serious. Be less serious. More lighthearted, humorous, easygoing. Be more present, patient. These are the most important one is don't take things personally. I now try not to personalize so many things, you know, like other people's actions are a reflection of them. My therapist told me, you know, and so many people, like, you know, someone gets angry or someone's driving and they cut you off and flip you off. It's not about you. Maybe they're having a bad day. Like, it doesn't need to get you so upset. So I now don't let other people affect me as much. I now also, this one is the most important one is don't sweat the small things, because I used to think everything was a big deal and I used to have to react immediately and get my cortisol up and solve it. And I now realize that everything resolves itself. Everything, 99% of things resolve themselves. 99% of things, when you look back on them 6 months later, were not nearly the big deal that you thought they were. So I just take that approach to everything, that everything is small, and I remind myself every day that every issue I'm going to deal with is small. And it is. It ends up that they're small. And I have a lot of issues that I'm dealing with. I probably have more issues today with 100 agents and 4 offices than I've ever had. And I'm the least stressed because I've just, I've kind of turned, I look through things from a different prism.
Were you addicted to cortisol in the past?
Yeah, I think so. Yeah. I used to think that I needed cortisol to have the energy to work hard.
Yeah.
I used to think that that was my motivating force, and I had to have this reactive, aggressive, cortisol-infused kind of approach to things. And I realized that I'm calmer, happier, more relaxed, less reactive, more, I think arguably more thoughtful, and happier. And I handle just as many things. And I think the people around me appreciate all of that more as well.
What led you to go to therapy in the first place?
Me and my brother were fighting a lot. So I said, let's go, brothers therapy, kind of like couples therapy, but for brothers. And I thought it was helpful. And then I said, I want to continue to see you, individually. And it worked. She almost quit on me. Brett and I would fight so much in therapy, and I was so difficult.
What were you guys fighting about? Just silly,
Brett and I fight over anything. Honestly, we can trigger each other and just really get after it.
Because you guys know what buttons to press.
Yeah, exactly. It's like 40 years of skill. We're both lawyers, we just go at it. I used to be very if there's one thing I was very reactive. I would just get that cortisol rush and I would follow it. You know what I mean?
Yeah.
And I just don't anymore. I feel it now and I'm like, oh, I don't need that, and I'm just so happy. I'm so much happier. And everyone that knows me tells me how much more chill I am. And
how long did that take?
5 years, probably. 5 years, but that's me trying. I mean, it's me reading my list every day. That's me going to therapy every week. That's me thinking about it and wanting to improve on these things. It's not, you can't be lazy about it. For me, it's like the gym for my mind. I've been going to the gym for 30 years. I go 5 times a week. Same, you gotta have that same approach to therapy.
Why do you think it took you so long to finally make that decision to try to actively work on it?
Because I think it's really easy just to kind of, well, first of all, I thought that I needed this reactive cortisol, aggression to kind of continue to succeed in business.
But something made you change your mind that you don't.
I think for everyone it's different. I definitely don't think it's other people telling you that you need to change. That's not going to change you. You really have to want to change. And I don't know if there's anything other than that. Just, people just have to wait for that moment for themselves. I'm not sure there's anything you can do or say to kind of make yourself ready. You just have to get to a point where and I'm just someone who wants to improve. And for so much of my life, improvement for me was getting good grades, getting into law school, opening up a business, making more money, growing that, there's all these markers that we have, especially in a capitalist society, of what success means. And it wasn't until I kind of viewed success as, my happiness and my ability to kind of create, happiness among people. Like when I started realizing that that's actually what success is, then I'm like, oh, well, in order to be successful under this new definition of success, I need to see a therapist.
How do you know if a therapist is good or not?
If you're getting better. For me, I probably could have, no disrespect to my therapist, but I could probably talk to a brick wall to some degree, because it's really about me telling my therapist what my problems are, what situations I got in where I did not handle myself in the way that I wanted to, and then how I wish I would have handled it. So it's almost me like talking to myself. And now you got chat. I mean, I think everyone should be using therapy apps now.
How is ChatGPT in terms of therapy?
Haven't used it.
Relative.
I've used it for
I've
certain
used it.
situations, and it's fantastic.
I've used it.
I use it for conflict resolution. I say, give me a script to follow, and it's really good.
I I believe that chat, or when I say chat, I mean AI. I believe that AI will be 50 times better than the best therapist on the planet. AI will have been able to read and take, essentially AI will have 500 PhDs, or more, whatever. It will know you far better than your therapist knows you. It probably hears you all day long. It probably hears, instead of having to go to your therapist and tell them about a situation, it will probably have heard your situation. It'll probably have heard Graham on the phone talking to the contractor, or whatever, raising his voice, or, whatever it was. So I think, that's the answer. The answer for therapy is going to be AI.
I feel like the problem though with that is people assume because it has the 500 plus PhDs that it's the smartest thing that they can possibly talk to, that they'll start treating it as though anything that it says is completely, without question, true. And you say, hey, I handled a situation like this. And then ChatGPT says, oh, well, maybe it's because, 5 years ago this happened. And then you're like, it has to be that. There's no way it's not.
Well, people already do that with their therapist.
That's true.
People already give too much credit. Chat right now is not that great, right? AI is still in its its beginning phases. In 5 years, it will be probably 99.9% right, and it will probably give you the best therapeutic answer you could possibly have ever received. Do I believe everything I read in chat now? No, it's got. It literally. Graham and I did a thing on it yesterday where I literally prompted it to push it in a different direction, and it gave me a totally different answer. But in 5 years, I think this will be the answer to people that can't think critically, and people that need therapy.
I'm curious. I'm sure you spend a lot of time with billionaires or ultra high net worth individuals. What differences do you notice in those sorts of people as opposed to your everyday person?
Very little. Very, very little. I don't think there's much difference between a billionaire and
Really?
Yeah.
I imagine to be a billionaire, you have to have an outside the bell curve personality.
No, I think, well, first of all, let's call it somebody with $100 million or more, because it's all relative. I don't know if there's a cutoff, but no, I'd say they're successful, but I think there are millions of people that I think that you are arguably more intelligent and a better critical thinker than most billionaires, at least half of them. And you're not a billionaire. Most of it is being in the right place at the right time. Most wealthy people are in the right place at the right time. Yeah, I'm not saying they're not smart. You have to be smart, and you have to be hardworking, and you have to be in the right place at the right time. That's how I'd say 75% of billionaires.
But I tend to believe that it's not like a switch, like a light switch, and it's like, okay, I made this one correct decision, I was in the right place at the right time, and I became a billionaire. It's more so like you got an opportunity, and that opportunity led to another one. You made the right decision there, and you made the right decision there. You failed, and you learned from it, and it's like it's a series of good decisions.
I would disagree. I'd say it's usually right place at the right time.
So you think most people, if given that exact right place, right time opportunity, not most people, but like
most
a lot
intelligent,
of people.
hardworking people, yeah. I think you could replace top 1,000 wealthiest people in America with probably 1 million other people, and nobody would know.
So you said
2 million, 3 million other people. I truly don't think that I think arguably if you personally were put in the position of half the billionaires in this planet, you would have done equaled or greater.
But you said intelligent and hardworking. Thank you.
Yeah.
If you said intelligent and hardworking, so you think those are very important characteristics for someone that is going to achieve that level of success?
Yeah, I think those are the two. I think someone generally a very successful person is generally a problem solver, and a problem solver requires critical thinking skills and a certain level of intelligence, and I think all of that also needs hard work. But those are not skills that are super rare. I'd say 5% of people have all those skills. That's 15 million people in America that have those skills. There's probably only a few hundred, couple thousand billionaires. So I don't think there's a big difference. I don't think there's a big difference between a lot of the wealthy people that I know and a lot of just the hardworking, intelligent people that I know. I've got a lot of friends that are no less hardworking or intelligent than billionaires, and they're worth, nothing.
That is a really interesting thing to point out, because now I'm thinking about people we've had on the podcast or just people I've met, and you take the archetype, the type of human that wants to achieve billionaire status, and they chase it and they chase it and they chase it. Those are never the billionaires that I met. That are like, I always wanted to be a billionaire. Every billionaire that I've met has been someone like Papa John. It's been someone who's achieved this ultra wealthy status, not because they wanted to be a billionaire, but because it just kind of happened to befall on them. Like,
I don't think that wanting to be a billionaire. Listen, does everyone want to be wealthy to some degree? I'm sure that everyone thinks about that. Like,
but there's a difference between wealthy and 100 million plus.
I think people. I mean, there's nothing that turns me off more than someone telling me what they're going to be. I think there's too much of that today. Another thing about most billionaires that I think I should address, they're not entitled. I mean, maybe they're entitled now, because they're billionaires.
They have everything.
But they didn't get to being billionaires by being entitled. I don't think that a lot of these billionaires felt like they were a victim, and I'm not saying there aren't victims out there. I'm just saying that mentality does not push you into, billionaire status. And having entitlement does not either. I think, as a personal example, I always felt like I could do something if I kept at it. I never felt entitled. I just felt like I had opportunity and I would just keep working hard. I never had aspirations of being a billionaire. I thought if I could make $10,000 a month, I could live a great life. And that was my goal. That was my goal, $10,000 a month. I mean, that was my goal up to not long ago. That's a healthy goal. I don't think anyone who has these annoyingly high aspirations is just that, annoying.
I tend to agree, and I also think another thing to note is I think that the people that make it to that ultra wealthy status they have an accurate grasp on reality. Yes. And then you have these other people that are somewhat delusional, which are the people that have a victim mindset or the people that have an entitlement mindset. They fall into that category because both of those are under the premise that they are the center of everything. If you're a victim, it's because the world is trying to keep you down. Yeah. If you're entitled, it's that you are owed everything. That the world is there to cater and serve to your needs. You want something and it will just manifest. It will follow you. And so the other people are like, no, the reality exists in the same way that just the reality exists. Like, I'm here, I'm placed here, and I need to do my best to see reality for what it is, play my cards right, and basically have an accurate prediction engine of, do I see reality for what it is? Do I predict if I make this action, will this outcome occur?
And it's not just one action.
You have an accurate grasp on reality.
I think that was super well said. And I also think that some people think that it's just one decision or one big bet or whatever that's going to make them wealthy. That's a terrible approach. I mean, go in and say, I want to be successful in this career. My goal is to make, a couple $100,000 a year or whatever it is, like baby steps. Don't just, otherwise, if you're trying to get wealthy super quick, you're going to be making dumb, risky decisions. And I think what you said is just one intelligent decision after another. And then 800 intelligent decisions and a lot of hard work later, you're a billionaire. But yeah, I still don't think, I know a lot of dumb rich people. I don't think that intelligence is a requisite to being rich. I think it's more likely that you're intelligent and hardworking and have critical thinking skills if you're very wealthy. But I think it's probably more right place, right time than anything else. So I would just encourage people to, I also don't know why people always listen to billionaires. Like, give me a break. The guy invested in oil in Texas in the 80s. No, he's a billionaire. You know what I mean? You could be an idiot and invest in oil, what is it? I saw this, no offense, well, I hate the Cowboys, so I'm just going to use this example. Jerry Jones invested in, finding oil in Texas in like the 80s or whatever, made, $50 million. It does not mean that he's a genius or that he's got some exception. So it doesn't mean that we should sit down and listen to what Jerry Jones has to say about
politics.
X.
Yeah.
Because, that's he was at the right place at the right time. He's probably has a modicum of intelligence and critical thinking skills and hard work. I give him all that. But there's no difference between Jerry Jones, the billionaire, and probably, 15 million other people.
Person. That's a really interesting point you made right there.
Well, I'm not saying there's no difference between him and a blue collar person, but there's no difference if that blue collar person is hardworking and intelligent and is a critical thinker and is working hard, yeah, there's really probably no difference. I'm a decent example. I mean, it was right place at right time for me. I mean, would I still be successful? Yes, but would I be this successful? No. I mean, I happened to have some beautiful women working for me on the Sunset Strip, and I had a producer come up and want to create a show that ended up being a hit. That's what am I going to sit here? Should everyone listen to me now because I have, some success and some money? Not necessarily. I mean, listen to me if you think I'm intelligent and a critical thinker and but don't just listen because I have money. I was a lot of my money, at least a decent amount of my money has to do with the fact that I was at the right place at the right time. I mean, I'm not going to take credit for that.
What about being a good boss? You said you had other notes on your phone.
Positive reinforcement at the office, compliment everyone and be specific. And don't criticize mistakes, make them teachable moments. Those are two that I try. I mean, I fail at that every day. You can't be perfect, but I try to remind myself I do better with positive reinforcement. When I was an attorney or something and someone says, hey, great work on this, let's focus next time on, I think you can do even better on this part. That kind of positive, as opposed to saying, dude, what the, why'd you give me this? Look at all these misspellings. If I don't think people really react so well to being criticized. I know I don't.
So how do you motivate someone if you find them falling behind? Or you think they're maybe just not doing as much as they could
I
be?
mean, listen, I guess there's something called I think like a sandwich. You're supposed to sandwich it.
Yeah.
Oh,
So you say something.
sandwich.
Yeah,
A criticism
compliment.
sandwich or whatever.
Yeah, either way. I mean, I don't like all these rules, and I've never used that in my life, even though my therapist told me to. It's too I don't like, fake, but just put yourself in their position. I mean, I get, things that I think could be done better all the time. I just don't think you can't just rip on somebody. You have to think about what is going to make them want to do a better job. You getting upset at them is not going to be, they're not going to walk away and be like, oh, I definitely am going to do a better job next time. They're going to walk away and be like, oh, So it's kind of common sense. I mean, you just have to be motivating, and you have to have, I think you actually have to care. I truly care about the people that work for me. I care about their quality of life. I care about their happiness. So, you take the time to kind of nurture that and develop that. I'm not excellent at it. I'm a hell of a lot better than I used to be. I mean, I think it was probably hard to work for me 10 years ago, probably even 5 years ago. I was really tough, aggressive, negative, terse, reactive, very demanding, very detail-oriented, but not in a constructive way, in a critical way. So, I think you have to create a culture of, do people want, I always ask, the people in my office, what's going to make you happier working here? I think if you create a culture where people want to come to work, I look forward to Monday morning as much as I look forward to Saturday morning.
It's so funny. We just talked about this last night. I went to a doctor's appointment, and they're closed from 12 to 1 for lunch. And I show up there at 12:55. They open the door, and the doctors are walking in, and they say, "Oh man, it's almost 5 p.m. We can almost go home. 3 more hours until I'm out."
Yeah.
And they're like, "What are your plans for Friday nights?" "Oh man, it's almost there." And I remember I briefly had an experience where I would think to myself, okay, only 2 more hours until lunchtime. And then after lunch, I was like, okay, only 3 more hours until I go home. And then after one more day, it's Friday. And then it's the weekend.
Yeah.
And then Sunday, I just remember that dread of man, I got to be up at 7 a.m. that next morning. I haven't felt that way in 20 years.
Same. I haven't
so
felt that way
foreign
since
to-
law school, since I was a lawyer.
Yeah. But
That is
just
rough.
thinking through that of hating what you do all day just to be
I
able
wouldn't
to
say
get
it's
off.
hating. I'd say it's not enjoying.
Sure.
Yeah. I mean, unfortunately, that's most of America. And listen, most people are, I'll be honest, most people are probably cut out for that, right? I mean, not everyone's going to be an entrepreneur. You can't have that. A society wouldn't function. So, I think for a lot of people, that's probably fine and acceptable. I think for the people that it's not fine and acceptable for, they go off and do things like you and me.
Yeah.
I do not like 9 to 5. I'm not cut out for it.
We got a question about creative finance deals. Do you get a lot of seller finance? Have you heard of sub 2? What do you think about any non-conventional way?
I don't like
unconven-
any of it. I honestly, anytime anyone even says the word creative financing, I'm like, shut the up, get out of here.
Doesn't it make sense if that's the thing that can push a deal through? For example, if someone buys a house 3-4 years ago and they got a 2.5% interest rate, and now rates are 5.5-6%, doesn't it make sense to try to just seller finance the equity that's there, or pay someone money to be able to take over the loan?
You can't do it. There's no way to there's really no great way to keep a loan and transfer an asset. Trust me, I would do it if I could. I have been in this business for 15 years, done billions of dollars in deals. Not a single deal have I been able to have the original loan kept.
So we've spoke to this guy Pace Morby, and this is like his whole big thing. He's got like couple thousand units or something. He talks about it. He's like the guy on YouTube that talks about creative financing, specifically also sub 2, which is basically you go in, you take over the mortgage payment. So you just send the money. And then I think what he does is he puts the deed in a trust or something. And it doesn't count for a sale. And then, you have the due on sale clause of the loan.
Yeah, and that's when it transfers.
I think it's he's only ever been called on once out of his thousands of deals that he's done for this.
But doesn't he remain liable for the asset, liable for insurance, liable in litigation?
So you're saying if he's buying,
he's the owner. How is that any different? How is that really substantively any different than a lease with an option to buy?
It's similar. Yeah.
Yeah, I mean, that's not a transfer of an asset. I'm not saying it's dumb. I think a lease option can make sense, but it's just, my understanding is that he would still be liable for anything and everything. Maybe in commercial real estate, you can isolate that risk a little bit, and maybe it's a little bit different, but in residential real estate, there's really no great way to do it.
So you're saying the seller in this instance, if you are selling a house sub 2 to someone else, so sub 2 is like when you just take over the payments basically, then as the seller, you're still liable for anything that could go wrong with the house.
Yeah, because you probably created some type of joint venture or trust or whatever it is.
So
the other thing too is you have to remain the sole owner. If there's any other ownership, then the bank can call the loan.
But he's been called by the bank once, but he said most of the time the banks just want to ignore it because this is just one small thing that's been sold off and sold off and sold off.
I mean, I'm not going to risk my loan.
As long as they're performing, then that's all that matters.
I agree that you're right.
And there's also, I will say, there is benefit. There's added benefit to the seller that we haven't even considered, which is, if you're selling a house at a 2.5% interest rate, basically, when you take over the loan, then the person can overpay whoever's buying the house. Or what you also see.
Wait, let me ask you a question. I own a $10 million house, right? Let's say I have $5 million of equity, and I have a $5 million loan at 2.5%. And I structure this. Does this guy give me cash up front?
So you could. Yeah. 100%.
So let's say
it'd be similar to a lease option.
But that cash up front is going to be treated as income, whereas on sale it's treated as long-term capital gains. So now I'm paying 50% tax on the money that he gives me when I could be paying 28% tax.
Or what you could do is just increase the sale price of the home, right?
No, I'm not sure how's that solved?
Well, wouldn't it solve it if you just sold the house at a premium? So for something it's not technically worth.
But we can't sell it. Remember, you can't sell it because if you sell it, then the bank calls the loan. You can't transfer the asset.
They haven't.
No, he's not transferring the asset. He's still on title. Otherwise, of course, they're going to call the loan.
I have no idea. Even when Pace is describing it, I'm like,
I'm not a big real estate guy, so I'm still trying to pick up.
There's no way for me to transfer this house to another person without the loan being potentially called. Or no, I mean, it would be called if I transferred it to him. Now, could I put it into an LLC, let's say, and then have him buy 50% of the LLC or something like that? Yeah, technically the bank can still call the loan. And then he'd have to buy the LLC by giving me money. So the whole point of a sale is I want to get my $5 million of equity, right? But if he gives me $5 million, then it's income. And now I got to report $5 million of income and pay 50% tax on it. There's just no way to get my equity out on this. There's just no way. I mean, I've thought about it. Even on a long-term lease with an option, you're still going to get an upfront payment. That's being treated as income. It's taxed at 55%. That's crazy. Whereas when you sell it, it's long-term capital gain. So you can't mess with that structure. There's no way to get your equity out except taking out a line of credit, if you want cash. I'm just telling you, there's no good way to do this. I would be happy to argue with that guy because I don't buy it.
He says for the seller, the benefit is that if you're trying to sell your place for a million, you're not getting it. Now you could sell it for 1.1.
Yeah, but you're not getting 1.1. I mean, so it's just a number on a piece of paper. You're really getting, you're really continuing to take all the liability. You're getting your monthly nut covered, but you'd be getting that covered by rent anyway.
So
and you don't get any equity because if you're getting any equity, you're paying massive tax on it. So where's the seller benefiting from this? I don't get it.
I mean, you could argue for the people that aren't in a rough financial position, it's more like an annuity. And then you could argue for the people that are in a rough financial position. A lot of people, if they
hold on
something
a second.
happens,
How much? Let's say my example, this $10 million house, right? And it's only costing me $20,000 a month because I've got such a great loan on it and low property tax basis. So this guy is paying me what, $25,000 a month? I mean, he's just
maybe he's paying you $30,000 a month.
Fine, but presumably I can rent it for $30,000 a month.
So maybe he's paying.
So how's this guy? I mean, he's getting all the benefit.
Yes, but also there's the situations because he doesn't do this typically with
sell it at all.
Well, he's not doing this with like massive $1 million homes.
No, but the example would
who cares?
But no, because a lot of the people, they're getting in a position of bankruptcy and they don't want to file for bankruptcy if they're underwater in the home. And then he's basically able to take and monetize the home more effectively than they would be able to.
How is he able to monetize it more effectively?
Well, if they've never been a landlord before. And they don't know
that's
how
a
to
totally different argument. You're saying he's a better property manager. I don't buy that. That's a different argument. I don't buy it.
It is a different argument. I'm just saying that makes this option a little bit more viable.
Well, then he's
taking sides
then the seller is not a good commercial actor. I mean, if he's buying properties off idiots, then sure. But if you have an intelligent seller, why would an intelligent, and I don't even mean that intelligent, I mean an average seller who just has a modicum of understanding of his asset, why would he want to enter into this transaction? I get why that guy wants to. I totally get why people would want to buy like that. I've had a dozen buyers try to buy properties for my clients like that, and I tell them to f off. Why would the seller want to do it is the question. It's a fake sale. It's not a real sale. You think you sold it for $1,050,000, but you didn't. You got $20,000. You got whatever you rented. You probably could get more money just renting it out. You're never going to get your equity. When are you going to get your equity?
I guess with renting, you would be responsible though for repairs.
You still are. Well, you could
if the buyer defaults,
you could find a tenant. That's why not just get a property manager and just say, hey, I'm going to give you.
Because then the buyer would be responsible for anything. And if the buyer defaults on that, you would take their down payment. Let's just say.
How is this any different than a good property manager? How is this guy?
The buyer's going to be responsible for the issues. With the property manager,
Let's say you hire a property manager.
You still have to pay the property manager, and you still have to pay for.
Well, but at the end of the day, if the dollar amount's the same, the dollar amount's the same.
Let's say a roof repair. Like you still have to pay the $20,000.
Let's say you get a property. Let's say you have an asset that's only costing you $20,000 a month. Obviously it could rent for more, and you get a good property manager to say, hey, this property manager says, hey, I'll guarantee you, I'll rent it for 10 years, and I will pay $20,000 a month, and I'll handle all everything. Property, it's like a triple net. Why don't we look at commercial?
Sure.
How is this guy any different than a triple net tenant? Except that he has a right to take the asset. He's just a really bad triple net tenant. I get why he wants to do it. I would love to be. Hey, I'm going to offer you. Here's a triple net lease. I'm the tenant. Also, I have a right to buy it at this price. By the way, if I want to, or I can, or
recession, I'm going to forfeit
recession,
my
I can
20% or something.
If it's ever not in my financial interest, I'm not going to buy it.
Yeah.
If it is in my financial interest, I will buy it.
By the way, guys, clearly we are filming currently in our studio, but recently you may have noticed we're on the road for a lot of these podcasts, and it's very, very difficult to lock down a studio space. However, White Glove Estates. We were there in Los Angeles. We filmed an episode with Mizkiff and with Stable Ronaldo and Mike Malak. He was also there. They were so generous to let us stay there, film our podcast. They gave us the entire space for nothing, just because they're very friendly people. Yeah. So
they're also right next door to the Oppenheim group. They're my best friends, and they do all of my personal properties and probably 90% of my clients' work. So I love them as well.
Yeah. Check them out. The link down below in the description, because they've seriously helped us out a lot. So highly recommend
we should say what they do too. They do like home remodels, AV, pretty much design, everything.
the best of the best, like the highest end stuff you could imagine. They do it all. So again, if that's you, the link is down
they
below.
actually built out all of the Oppenheim Group offices as well. So
They
if you
did?
like those, yeah, they did all of them.
Looks great in there.
Thanks.
Yeah. Cool. Thanks so much, Jason. Your info will be listed down below. Thanks so much.
Thanks,
until next
guys.
time.
Till next time.